Hello and welcome to Market Psychology 101, where we look for value in the markets when there's fear and are cautious when there's greed. In today's video, we are going to be taking a look at different indicators for the stock market, as well as technical analysis of the Magnificent Seven stocks. Let's get into fear and greed. And on CNN, we are still down into neutral. Something else that we have been watching is to see if we are following the typical seasonality chart for presidential elections, and where we would have the presidential pump as well as the Santa Claus rally into the end of the year, the very beginning of January, and then possibly see some sideways or down action for about half a year. We'll see how that plays out. Something else to keep in mind is what the market does in reaction to the rate cuts. So far, we've been following this dark green line. The market has been making newer all-time highs since the first rate cuts began. The Fed is going to be making a decision on upcoming rate cuts in December 18th, around there. But what's really important to note is that when the Fed cuts low and slow, that tends to be better for the markets in the near term. But when they're cutting large and fast, it's typically because something is broken in the markets. However, I do caution you as far as perspective on the markets in general. Not that you can't dollar cost average or find certain discounts or deals, but I think now, especially with the price to earnings ratios being so elevated, and you hear guys that are way smarter than me when it comes to this stuff, like Warren Buffett, Michael Burry, talking about being very cautious in the near term. This is exactly why, because many stocks are elevated as far as the price to earnings ratio. That's basically saying how much more than the stock is worth are you willing to pay for? Are you willing to pay 30 times more, 40 times more than what that ratio actually is? So that's getting pretty elevated. And usually when this happens, there tends to be a correction sometime around then. Of course, on this channel, I talk about crypto a lot, more than stocks. And on crypto fear and greed, it was in this downtrend, but now it's sort of reversing upwards. We are seeing higher lows. We'll see if this trend continues up again. And subscribe if you want to hear more about the crypto markets. I talk about the cycles, the Bitcoin rainbow chart, where we are at in the crypto cycle right now, if this is a pattern that's going to continue. But and before we get into the S&P 500, just note that as far as Bitcoin, it is between the 1618 fib at 102K. That's going to be a difficult ceiling for this to get past. You can see how the price action is bouncing off of that, but it's also honoring these 20-day moving averages and this trend line, which comes from the double top in 2021. So curious to see what Bitcoin does. If it moves under 96K, maybe we'll be going sideways down for a little bit. But if it gets above 102K, then the end of the crypto cycle might possibly be near. So we'll talk about that more as it comes. Right now, let's get into the S&P 500. And as you can see, ever since it made this recent high at around 6,100, did have a sell signal, a buy signal, but you see that wick above it, and now a doji, that means undecided, sell signal yet again. So wouldn't surprise me to see the S&P get down towards 6,000, or even this 50-day moving average at around 5,900. And if we go back and look at the S&P, something I like to look for as far as the indicators I use trend lines, I use Fibonacci retracements, I use the moving averages. Moving averages is really nice because you can see where is the deepest value on these moving averages. And even though it likes the 50-day moving average, you do see it come down to the 100-day moving average every once in a while. That would be around the high 5,700s. The S&P 500's been in this channel, this upward channel. That's what this whole giant blue box is in ever since the great financial crisis. Not getting higher than this channel, only once getting lower, though it did have candle body close on the weekly. And this trend line, again, the 100-day moving average, and right around where the 20-week moving averages are at around the high 5,700s would be a good area for a bounce. And then the next couple areas where I'd be looking for possible tops here would be somewhere around the mid 6,000s and even around 7,000. Possibly that could be a number the S&P hits before a large correction comes. As far as the volatility index, the VIX, we're still in low volatility, so overall doing fine there. And as far as the percent of stocks above the 200 day average. It's still somewhat elevated. When it gets to typically around 70, that's when you have to be careful. But we do have these moving averages under here, so wouldn't be surprised to see that percent get down to the 50s there and possibly hit this trend line somewhere around 40. Again, talking about leading indicators that have preceded recessions. This is one of them. This is the US 10-year minus 2-year. This is when you hear about the yield curve inverting, going under the 0% line, and then uninverting, moving above that. Let's hide these right here. What this has shown in the past is that when there's been an uninversion, the bottom of the market, at least after a large inversion, is around a year to a year and a half or 2 years later. That was the dot-com bubble and the great financial crisis. So typically there are, or there always have been difficulties in the markets after the uninversion here. So that would put us out sometime around 2026, late 2026. So just something to keep in the back of your mind that if you are looking at dollar cost averaging in any stocks, it's important to be patient and have a plan and look where are the levels that you would like the dollar cost average. That's why I like taking a look at the moving averages. As far as the unemployment rate, you can see here, let's put this on log, shows a little better. It is having this overall trend up, did tick up a little bit. We'll see what the unemployment numbers are in the future, whether it's staying in this low 4% or starts making newer highs. If it starts getting to 4.3, that of course is going to worry people. And then if we go to inflation, here we go, USIRYY, the inflation rate, you've probably seen stuff about this in the news lately, that inflation, you remember how high it was here. The Fed's target, the magical number is 2%. And even though inflation, it did have this base and came down here to about 2.4, it did have a little bit of a move up to 2.6. Curious to see what the moving averages are here. So you can see how that 200-week moving average was support and there are bounces off there, broke underneath. I'm curious to see if inflation does come up to that 3%. Is it going to meet resistance there and then come back down? Again, we'll see. So just some things to keep in the back of your mind. Let's get into the Mag 7 stocks. And first, let's go over to NVIDIA. And you can see here, we have this fib drawn from the low to the high from this recent move down here. And NVIDIA, it got to about 150. Let's look at this here. We can draw our fib just a little bit more accurate. Wicked here to almost 153. And then you can see this 236 fib here, how that's been holding support, as well as there's this 200 moving average. That's on the hour. Let's take a look at the daily. I'd rather do that. So the daily, we have the 50-day moving average, the 236 fib. That's where NVIDIA is holding support right now. If it gets underneath there, then we're talking about 130, 124, and then we have the 0.5 and the 200 at around 114. So if things all of a sudden got really bad for NVIDIA, I'd say that 0.5 and where the 200 was at around 114, the 200-day, would be an area I would wait for personally to see a discount. So next, let's go over to Microsoft. I have Microsoft. You can see after it had this high here at around 467. Let's zoom out a little bit here. So yeah, we drew from this low to the high, came down to the 382 fib, as well as the two. Look at this, how much Microsoft loves the 200-day moving average. And we were talking about this, how as far as Microsoft is concerned, that tends to be better value or the start of good value, good discounts for Microsoft. And that's what it was. It got a nice strong bounce. It is looking like it wants to re-challenge those highs it made. And if we want to look at some possible price targets, something I like to do is go to the most recent large move down and draw a fib from there. We'll see if we're above our extensions. I haven't done this in a while, but we draw from the high to the low. You see how I did that there. And then we take our fib off log, which we can't do until that's on log. I know it sounds weird, but stick with me here. Take the fib off log, and what do we see going on here? The 1618 at 432, you can see it was honoring that, came above a little bit, held the 200. Now it's back above the 1618. So curious to see if we're just going to make a lower high here, or if we are making new highs. The 2618 all the way up here at around 560. And it sounds crazy, but at the peak of a bull market, I'd be looking for a profit taking around that area. Should it get there? As far as Apple, so this fib is already drawn nicely for us. Let's make sure it is off log scale, which it is. Great. You can see here, look how well it treated that 1618 fib as far as support, as well as the moving averages. This is why I like the Fibonacci retracement and the moving averages. You see how well they work together. And then, of course, you can draw trend lines. So part of my goal on this channel is using technical indicators that you guys can use as well and that are easy for y'all to understand. So yeah, we could draw a trend line here, broke above that, so we don't need to do that right now. But it does like this 100-day moving average. Apple is moving on up, and the 2618 would be at around 280. So 280 would be the next target. And if it does come down, you see how it likes 100, somewhere around, I don't know, 267. Next, let's go to Amazon. And this one moving up towards the 1618, looking very bullish at around 255. It is getting extended. So again, if you see it come down, what moving averages has it liked since this move? You can see it likes that 50-day moving average. Can always come down to the 50-day, but look to see it try to get up to that 255 area. Google, as far as Google is concerned, this one is getting, we have to take our fib and extend it out. And let's see here. I want to get it matching this bottom right down here. You can see Google is just now starting to, is it getting above the 1618? Not quite. It does have a candle body going right up to it, but it's just wicking above. So not sold on it yet. It could come back down to this trend line that we drew, or that I drew in a very sloppy way. There we go. So it could come back down to this trend line and then bounce again. But if Google starts to get above that 1618, the 2618 target, next target, 260. So seems crazy, but 260 if Google is able to get above and stay above there. Meta, man, has Meta been on the move? We talked about it down here, how Meta has really liked. Let's zoom out on the weekly. Look at this. Meta has loved that 20-week moving average. It just really never gets underneath it and got down to the 1618. Not really even the 20. Had a nice buy signal, and Meta's moving on up. And as far as a price target for Meta, the 2618 is at 865. So again, doesn't mean I have to get right to there. People sometimes take profits, especially like a little bit before, so don't be surprised by that. But Meta could get up to somewhere around 868. Remember, this one doesn't have over 3 trillion in market cap like Nvidia, Microsoft, and Apple. So this one could have room to run as far as in the near term. And then lastly, let's go over to Tesla. I know Tesla's been doing very well lately. So you can see here, it did make a new all-time high. Let's zoom in on this here. Let's try to get this exact as we can. So there we go. The fib, we have it from the high to the low. And Tesla, as far as where it's at right now, let's zoom in on the daily. So you can see here, that's looking pretty good. Tesla was in this channel. We were talking about this last time around, that can it break out of this channel? And it has. So that's mega bullish for Tesla right there. A little bit of a fake out, and then boom, start challenging it. Now we see the candle bodies getting above. That looks great for Tesla. All my own personal biases aside, any long viewers of this channel know that I'm not overall a fan of Tesla, and that's fine if you like it though. As far as the 1618 target, 605, and then the 2618, 907. So seems crazy, but if this is to continue getting above its former all-time highs, 605, 610, give or take, would be the area to watch in there. So we're definitely getting into very extended bullish times. We are in one of those secular bull runs that's been going on for a while. But again, I think overall, I showed you evidence before where the writing's starting to be on the wall. And I'm not saying a recession is imminent. Of course, we never know when black swan events will happen, though I don't plan for that as part of my own investing strategy outside of investing more when they do. I still think there's room to run. And I still think in my opinion, that 2025 we're probably going to see increased volatility, but don't be surprised to see some big spikes up, and just be careful as far as long-term investing. It's okay to be patient, make a plan, pick what moving averages you like, and all those good things. And even if we take that off and we go to, we'll finish with this. We'll go to a couple relative strength indexes, or strength indexes. You'll see here we do have bearish divergence forming, so it means higher prices, lower strength in the RSI. If we take that out on the monthly, you can also see that going on right here as well. So let's put this on auto. That looks like crap. So as far as the monthly divergence, you can draw it like that. And these can take a while to play out, but just something to keep in mind with these. Another indicator you could watch for would be the ultimate RSI. And I want to share all the indicators with you guys. And you can see when there's these big moves in the market, let's hide these a little bit. When there's these big moves in the market, how we peak up here, we're just starting to get up to that peak. So if we're just drawing these out as we've done before, and let's measure some of these moves. So this was 20, we're just going to look at when it started above to when it went under. So about 20, what was that, 2013 to 2016, 1,217 days. From this move, it was about 884 days. The RSI staying extended here, 577. So you can see each time there is a pattern of it getting smaller. So if we just go to somewhere around 577, September of 25, that could be an area you could look at where this starts to roll over. And so just something to keep in mind. You can see when this RSI, the ultimate RSI, rolls over, that's when we can tend to have some of those corrections. So sometime around September next year, again, if this is to play out in a similar length as any of these guys before. So let me know what you think in the comments below. And thanks for watching. I'll try to do a live stream tomorrow on crypto. So take care. Bye-bye.